2022 has been a brutal bear market for crypto, with some of the largest players in the space like FTX, Three Arrows, and Celsius filing for bankruptcy. While major coins like Bitcoin and Ether are down around 65% from January. The total crypto market cap is now $810 billion, down from $2.1 trillion at the start of this year. And crypto winter could get even colder, with questions now arising about possible liquidity problems in major crypto firms like Binance and Genesis. Well, my next guest says get used to the crypto chill and claims that crypto as a sector will never again heat up and that we will never experience a crypto bull market run again. But, big but here, this does not apply to Bitcoin. Joining me to discuss this and to give us his crypto and Bitcoin outlook for 2023 is Mark Moss, host of The Mark Moss Show. He is a Bitcoin and macro-focused investor with over 25 years of experience as a full-time investor entrepreneur. And he is also the author of Uncommunist Manifesto and the CEO of Market Disruptor. Mark, great to have you with us here on Kitco.
Yeah, thanks so much. I'm excited to be here.
All right, so Mark, you've made a pretty big call here saying that the crypto space as a whole will never again see a bull run. So we have to start there. Now, obviously, largely triggered by the fallout from FTX, which is far from over, the collapse leaving an estimated 1 million creditors facing losses totaling billions of dollars. Many of them are big funds that were fueling the sector. But the biggest ramification here is that the FTX collapse now clears the way for regulators to march in with ferocity. And this regulation, combined with the contagion, is going to effectively put a freeze on the crypto space hype. Now, you're very clearly making the distinction between crypto and Bitcoin. But before we get into that, explain why you think we have seen the last crypto bull market.
Yeah, certainly. So I think this does trigger a lot of people, a lot of cryptocurrency enthusiasts. And I think the main reason why, main thing we have to understand is that there's a big misconception by most people on how the actual cryptocurrency space works. And so we like to talk about Bitcoin, not crypto, not meaning that Bitcoin is not a cryptocurrency, but when we talk about Bitcoin, we're talking about Bitcoin, we're talking about crypto, we're talking about crypto. So in the crypto space, not Bitcoin, in the crypto space, you have to first understand how it works. And so let me explain that. So companies like FTX are a perfect example. As a matter of fact, SBF gave an interview earlier this year, I believe it was May this year, to Joe Weisenthal and Matt Levine, I believe, where he explained cryptocurrency, and he used an analogy. He said, let's say that you have a box. And let's say that this box is like a world-changing protocol. And then you create a token for the box. And then you release just a small, thinly traded amount of these tokens available to the public, and a market maker artificially creates a price so the public think there's something of value there. Then they all start to trade this box token, he calls it. All right, so he basically explained the way the cryptocurrency space works, and venture capitalists love this. So typically, if you're a technology company like an Uber or something like that, you would have to go pitch your new idea to real investors who would have to give you real money, who would lock that up for typically 7 to 10 years as a typical venture capital timeframe. And there's no liquidity. And then you would have to hope or pray that there would be a liquidity event on the back of that, a buyout, or they'd go public. Well, what cryptocurrency has done is allowed venture capitalists to do venture capital, but without any of that pesky lockup. And so basically venture capitalists could come in, they could buy this box token, as SBF called it, for 3 cents and immediately turn and dump it on retail for 9 cents or 12 cents or 26 cents. VC loved it. They could come in, have instant liquidity, make 3 times, 5 times, 50 times on their money. And so, of course, money started pouring in. Hundreds of millions, hundreds of billions started pouring into the space. Then, of course, all of that money created a lot of excitement, a lot of a buzz. You start hearing about all these coins that are going up by crazy amounts, 1,000% returns, 10,000% returns. All this money starts going into media. So now you see all these interviews, you see all these, Super Bowl ads, all these things. And so it creates this giant buzz. It's brand new. It's brand new technology. It's going to be the next Bitcoin. Look, Bitcoin went up 10,000%. This could go up 20,000%. All this money, all this media goes into that, which made venture capital very, very wealthy. And so it created this whole buzz. And so if you understand that first, that's how it worked. Sam Bankman-Fried laid it out. We saw that. That's what happened with FTT token. So they created the FTT token. They thinly traded it by Alameda. They gave it an artificial value through their market maker company, Alameda. And then they use that to leverage into real assets. So if that's how it works, now if we take that understanding, now let's take a look at what's going on. So we've been hearing about regulations coming to the cryptocurrency space for a long time. In 2017, we saw the boom of the ICO phase. And, the SEC started kind of poking around and, slapped a couple lawsuits here and there. And like, maybe we'll do something. Just a side note real quick. I do want to just make a real quick case here. At the Bitcoin conference, this went out into a Twitter thread. At the Bitcoin conference last year, I was on the news desk and I was sitting next to Kevin O'Leary. And he was there not begging, but basically saying how bad we need regulations. If we have regulations, it opens up the space. And I said, hey, Kevin, I get it. You're Canadian, but I'm American. And in America, we're free. And we don't ask for permission. We don't need regulations for permission. Laws and regulations prevent us. It takes away our freedom. Okay. And I do want to just say this real quick because I am not here for regulations. I'm not here saying that as a Bitcoin maximalist, I wish regulations would come shut down cryptocurrency. So I'm not saying that, but this is what I'm seeing.
Okay, but seeing as we've touched on that point, we've had Kevin O'Leary on the show several times as well. I believe that his broader argument with regulatory clarity, which is what he was calling for, was that would open the floodgates for institutional investors to come in and that they were being held back by the lack of clarity with regards to regulation. I believe that was the point that Kevin O'Leary was trying to make in terms of encouraging regulation to come in and sort of put order in the sector at large. But go on and continue to make your case.
It was, and I just want to make it clear that I am not saying I want this to be true. This is just what I see.
You're saying that whatever you're about to explain, including regulation, including this crypto bull run coming to a grinding halt, is not necessarily what you wish will happen or what you desire will happen, but you are just laying out the case as you see it unfolding.
That's exactly right. And so in a Twitter thread, I got accused, and on the YouTube videos, I got accused of being this maximalist who just wants regulators to come and shut down crypto. And that's not the case. I don't want them. I believe that I should be able to gamble my money or buy lottery tickets. I should be free to use my money as I see fit. I don't need the SEC or any regulatory body to protect me. But that's what I want. It's not what I see. So
we don't always get what we want, Mark.
That's right. That's right. And so we saw, 2017, the ICO phase, a couple of lawsuits and judgments got placed. And then when it kind of got reinvented, they kind of called themselves IEOs or IDOs or DeFi. And they thought they've changed the flavor a little bit, just enough to stay out of the crosshairs. But I don't think that's actually what the problem was. It was that the SEC just hasn't decided to move forward and take enforcement action on these for any number of reasons. But I think now is the time they're going to be forced to act. The SEC looks horrible. In my opinion, their number one job is to protect consumers, and they have failed. They should shut down in disgrace and close up shop. Of course, that's not going to happen, but they need to regain confidence somehow. And I believe this is going to force them to act. It's going to force them to try to reclaim some confidence, and they're going to be forced to do something. We could even take another view, which you may want to dig into, which is maybe this was all part of a process to get widespread buy-in to actually get these enforcements in place. But either way, whichever way you want to look at it, I believe they're coming next.
We will definitely unpack that second point, that this was perhaps by design. But let's focus firstly a little further on this idea that you say the crypto sector as a whole is never going to see a bull market run again.
Yep.
And one of the issues that you put out in your tweet, the thread there, is this idea that crypto altcoins were taking advantage of regulatory arbitrage, allowing projects to capitalize on this gray area of lack of regulation. So explain that and explain why the regulation that we will see in some form or another is going to end this.
Sure. So the regulatory arbitrage. So we already have regulations in place. So for someone like Kevin O'Leary who says, oh, we just need clarity so we know what to do. It's like, we kind of already have clarity. We already kind of have laws. You want to pretend that they maybe don't fit. And because they haven't enforced that, maybe you think they don't. But we have something called the Howey test, which is outdated and it's old. And it's a 100-year-old law that applies to citrus farms. I get it. However, there's four main points. One, an investment of money. Am I giving money and hoping for more back? Two, in a common enterprise. So all cryptocurrencies have a issuer. There's a central party that got together, created the token, and issued them. That's a common enterprise. Three, with an expectation of profit. If you just type into Google, cryptocurrency investment comes up as the number one thing. And then finally, four, to be derived from the efforts of others. So with Ethereum, for example, we have to hope that the Ethereum Foundation and Joseph Lubin can pull off the merge and that they unlock the tokens. And so I think it clearly fits those four things. So there's regulations there. The arbitrage is that they're trying to get around it. And so we have a path for tech companies, and Silicon Valley follows it all the time. If I create a new technology, I go have a friends and family round, I have an angel investing round, I have a venture capital round, and eventually I can go to a publicly issued security. What they're trying to do is skip all of that, go directly to receiving money, issuing something back in return, and skipping the entire regulation process, which can take a year, can cost hundreds of thousands of dollars, and it's very cost prohibitive. And it doesn't allow them to instantly get liquidity of potentially tens of millions of dollars they dump on retail. So that's the regulatory arbitrage that they're skipping past. And if you understand that, then you can understand why it was such a big appeal.
Okay, so because we're going to have regulation, which you think is going to classify most of the crypto market as a security and therefore fall under the SEC regulation, under the Howey test, which you just laid out, then they will be subject to SEC oversight and more stringent regulation, which means what? That means VC capital no longer goes in here. This means retail interest investor is lost. Like, why does this necessarily mean the end of the crypto bull market? And when I say end, I'm quoting you because you're saying it's never going to happen again.
And that's exactly right. So what am I saying? I'm not saying, and this is where I got a lot of pushback, I'm not saying that cryptocurrency dies and goes away and you never see it again. I'm not saying, a lot of people would say, but Mark, you don't understand. If the SEC comes down hard and passes regulations, it'll just go offshore. The SEC can't stop innovation. And I agree to all of those things. But again, you have to understand how the market worked. So what drove when I say the cryptocurrency market, I'm talking about it collectively. So when you saw the entire cryptocurrency market cap go up together, and you could close your eyes and throw a dart and basically hit a crypto token that would go up in value. So I'm talking about that. So what happens is, sure, the SEC clamps down and it goes offshore. Great. Goes to some little small jurisdiction. But the American venture capital money doesn't go with it. American venture capital companies can't go skate past U.S. regulations to try to invest in these little obscure markets. And so, sure, it'll move to another country and there might be a little bit of innovation, but the money won't go with it, which drives the entire market cap. Most of the projects that are serious, that are backed by these big venture capitalists, will have to go the traditional venture capital route, which, as I said, is a very long process, a very expensive process, which my guess is out of the 20,000 cryptocurrencies or so, most of them won't go through that process. They don't have the time, they don't have the money to do that. And so most of those go away. Of the remaining few that do, they're going to have to go through the regulation process, just like any other security would be, which would be full disclosure. Imagine Ethereum going through a full disclosure. Who created the token? How many tokens did you give? How many are controlled by the insiders? What's the connection between the Ethereum Foundation, Joseph Lubin, and Vitalik Buterin? Like, who controls the tokens in the merge, lockup, right? Imagine them going through a full disclosure. I can't imagine they'd want to do that. Then on top of it, once they've done that, and now I look at them like any traditional tech stock versus any other payment app company like Cash App or whatever they propose to be. Now I have a apples to apples comparison with full disclosures, and I can choose which I want to go forward with as an investor. So I think most of them never make that jump. Most of them can't make that jump even if they want to. And even the ones that do, once they do, they're going to be compared just like a regular tech stock. And some of them will continue, and some of them will continue to get investment. So I'm not saying it's going to go away forever, but I think as a category, its days are over.
All right. So just to be very clear, you don't believe everything goes away. You don't believe all cryptocurrencies go to zero. You're saying that you don't foresee an era like we had 2017 or 2021, where there's a hype where everything goes up together. Like many investors, many people are still hoping will come again. You're saying those hopes are going to be dashed. Is that correct?
That's what I'm saying as a category. Now, as an investor, there's always going to be a, penny stock, or there's always going to be a gold mining company or a new, biotech company come out of Silicon Valley. It's always going to do good. So there's always going to be little stocks do well. I'm talking about, yes, as a category.
Okay, but the argument against a bull run, it hinges on this idea that the SEC will regulate cryptocurrencies like they do most securities, that they would probably be classified as a security, that venture capital funds would subject their crypto holdings to a long-term holding period instead of the pump and dump, if I may call it that they've been used to. And essentially, cryptocurrencies will become comparable to stocks as far as regulation goes, and investors will choose to go into the stock market instead. But just to push back here, not saying I disagree with you, just to push back here.
Yeah.
The stock market is heavily regulated. We still see bull runs in the stock market. So why wouldn't the same happen to crypto, particularly when you have crypto tokens that could represent a stake in the metaverse, in Web3, in NFTs, a sector that investors would be very keen to get into?
Well, like I said, I believe most of it goes away, right?
Okay.
So it got a lot of money because these venture capitalists love to come in, put these monies in tokens, have instant liquidity. But if that gravy train, if we want to call it that, goes away, and they have to go to real investors and get real money and go through this long regulation process, I think the majority of it goes away. So that's why I think that's the case. Now, as far as a potential investor getting a token versus a share versus a stock versus a piece of equity, it's all the same thing. You can call it a DAO. Whoever has the most tokens gets the most votes, sort of like whoever owns the most stock in a publicly traded company gets the most votes. So it's all the same thing. They changed the word and they think they've invented something new, but the reality is it's the exact same thing. Whoever has the most tokens in a proof of stake system gets the most votes and has the most say over the system, similar to whoever has the most equity in a publicly traded company gets the most votes. Obviously, there's nuance with classes and shares and whatnot, but for the most part, it's the same thing.
You could argue, Mark, that a purge is exactly what the sector needs, and perhaps that this is a good thing. Do you have any thoughts on what tokens, what protocols, what altcoins would potentially survive this?
Sure. So I think there's a couple things here. So first of all, I believe that there is something really, really big going on here that most people are completely blinded to. And the reason why they're blinded to it is because cryptocurrency is here. And so what am I talking about? About every 50 years, last 300 years, about every 50 years, there's a technological revolution. Not a new technology, but a technological revolution. The difference is a technology is like an iPhone. You take a computer and a phone, you put them together. Cool. That's nice. Changed my life. I like it. But a technological revolution changes the course of humanity and drives financial markets. There's been 5: industrial revolution, steam engines and railways, electricity and steel, oil, automobiles, and microprocessors. Mm-hmm. I believe Bitcoin is a technological revolution, and the revolution is decentralization.
Right.
Now, decentralization is achieved because everybody in the world, anybody in a third world country with an old laptop, could download the entire Bitcoin database and run a node. So it's decentralized. That problem has been solved. All the other 20,000 cryptocurrencies are not solving that problem. So what are they? They're making a video game experience better. They're managing lettuce on a supply chain better, right? But they're not decentralized, which is what the revolution is. So when it comes to, and this is where people get hung up, if it comes to just investing and all I'm trying to do is increase my US dollar holdings, people would say, Mark, what do you mean Cardano's a scam? Look how much money I've made. It's not about how much money. We're witnessing a revolution that Bitcoin is solving a problem that has plagued humanity from day one, which is how do I secure my property in a way that can't be manipulated, seized, or stolen? I can have custody of it, and if I want to send it to you, nobody could stop it, block it, or prevent it. And decentralization is what solved that problem. And so I think for most people who are just thinking about, oh, I'll buy this crypto token because I can make more US dollars, that person and the average Bitcoin maximalist or Bitcoin community member, they're just not seeing the world in the same way.
All right. So again, you're making a very big distinction between Bitcoin and crypto. I get that your theory says that not everything dies, but the hype in the sector as a whole dissipates. And Bitcoin would be exempt, I'm assuming, because it's classified or most likely classified as a commodity. Both Gensler and the former SEC head, Jay Clayton, both alluded to Bitcoin being a commodity. So make your case why you think Bitcoin alone then will see another bull run?
Yeah. So both, as you said, Jay Clayton, the previous head of the SEC, and Gary Gensler have both said that Bitcoin is a commodity. Bitcoin only is a commodity. Gary Gensler believes that almost everything else is a security. And if you look at just what a commodity is something that typically would come from the ground. Anybody in the world can get it, and it's fungible no matter where it is. There's no common issuer. So think about oil. Anyone can go buy a piece of land in California or in Morocco or wherever, and they can drill for oil. And if that oil comes out of the ground, it's fungible. I could grow wheat or corn in the Midwest or in the Ukraine, and corn is corn. Anybody can buy land and grow corn, or anybody can get gold. The same with Bitcoin. Anybody can go get a computer, hook up to the network, and they could mine Bitcoin, and Bitcoin is fungible. There's no common issuer, right? All the other cryptocurrencies, including Cardano and Ripple and Ethereum, had a common issuer. So they created that token and issued it. That's the difference of a security. Now, they've already been clear about it being a commodity, and it's now regulated under the CFTC. Cryptocurrency is yet to be seen what it's going to be ruled under, but most likely it's security. I just saw today on Well Chart on Twitter, they said, just in, Vitalik Buterin says XRP is, quote, completely centralized. Ripple CTO reacts saying Vitalik doesn't understand. And so now they're all saying, well, Ethereum is centralized and Ripple is centralized. And so we'll see how that plays out. But what I think is going to happen is that, as I said, I believe that Bitcoin is the decentralized revolution, it's a technological revolution. Cryptocurrency is sort of like a distraction, or sort of like a DDoS attack, a denial of service attack. So all the ads, I get them in my email every day. I'm sure you see them as well. The next Bitcoin, the next coin to go up 10,000%. And so, prices move on supply and demand. If there's more people that want to buy Bitcoin, more demand for Bitcoin, but the supply is capped at 21 million, the price would go up. But every time another person says the next Bitcoin, you can make more money with this coin, the unsuspecting average person will then jump to this next coin. So it's this denial of service, and it pulls this demand into these 5,000, 10,000, now 20,000 cryptocurrencies. And if most of those go away, let's say we go from 20,000 down to 20, now the majority of that money can move right back into Bitcoin.
All right, so there will be some protocols, some altcoins that survive. Some do have utility protocols that people run, as I say, a lot of Web3 on NFTs, smart contracts and such. But ultimately, all of the excess that has flooded the speculation in altcoins, that's going to get drained, go into Bitcoin. And,
let me hit on that point that you just said there, because you said a lot of these other tokens, Web3s, et cetera, have utility. And so we just saw this case go through the SEC with a library token, LBRY token, which is it's like an open source blockchain that's like a YouTube competitor. And they have and my videos go on there, by the way, and they release their own token, and it has utility. So if you use the network, you get the token, you get rewards, et cetera. And the SEC, this was just a couple months ago, SEC sued them. They won. This was in March. They got sued, and they said, "But wait a minute, we have utility." And the federal judge, Paul Barbadero, District Court of New Hampshire, said, "Quote: No reasonable trier of fact could reject the SEC's contention that Library offered LBC as a security, and Library does not have a triable defense." So they said, "No, it doesn't matter if it has utility. This is security." Right. So I don't know if that utility piece is going to hold water.
I'm not necessarily challenging the idea that because some altcoins have utility, they won't fall under the SEC mandate and the SEC regulation and the security. I'm just saying that they do have a purpose, they do have a use, while Bitcoin has the perfect sound money purpose and perfect store value purpose, as you contend. I'm saying that other coins and other protocols do have utilitarian use in Web3, in metaverse, with NFTs, so forth and so on. But let's go back to this idea of how you say, Bitcoin is there for a bigger purpose, if you will. And Bitcoin has grown partly in response to the disillusionment with fiat currency, the devaluation and the debasement of fiat. And arguably, Bitcoin is then the biggest threat to central bankers because it represents sound money. So wouldn't government and regulators want to perhaps take the harshest action against Bitcoin? Why would Bitcoin be the one to survive this regulatory onslaught?
Well, that's one way to look at it, sure. But I think the other way to look at it would be that everybody knows the US dollar is not a good store of value. There's no one pretends that it is. Everybody knows it's not, which is why bonds are a 100 trillion market. That's why equities have $118 trillion of value. That's why real estate has $326 trillion of value. People put their money into real estate. They put it into stocks to save their value. They don't hold it in dollars. And so if you want to take that case, you would go, well, why would they allow people to store their value in Bitcoin? Well, why do they allow them to store their value in gold or store their value in businesses or store their value in real estate or store their value in stocks?
And well, there was that period in time, Mark, where the government did confiscate gold.
Right. But I made a video and I talked about this. I think Ray Dalio has it wrong. And of course, he's forgotten more than I'll ever know. I respect Ray Dalio. However, he made a case that the reason why the government seized gold in 1933 in Act 6102 is because they didn't want a competing store of value. And I believe that narrative is wrong. And the reason what happened is when in 1913, when the Federal Reserve was created, they started printing too many of these paper gold certificates, these claims. And by 1933, the government had created all these paper claims, but they didn't actually have the gold. And the government owed gold, but they couldn't print gold. But they needed the gold. So what'd they do? Well, they stole the gold that was in the banks. So I don't think it was about a competing form of store of value. I think they actually just needed the gold. And today the government doesn't owe gold to anybody. They don't owe Bitcoin to anybody. And so they just print, they're on a fiat money system.
So you think the government is going to be quite happy to have Bitcoin seen as an alternative store of value asset?
Well, I think there's the government is a big term. And so there's some people who
Fair
will
enough.
be, and there's some people that won't be, right? And so I think Jerome Powell at the Fed, I think he's favorable to Bitcoin. We know there's at least 24 high-ranking members in the government, Senate and House that are pro-Bitcoin, and so we know there's a lot of people that are pro-Bitcoin in the government. Now, of course, we have others who say that it helps elicit, illegal transactions, like Elizabeth Warren, for example. And so then we have those people, but I think mostly they're attacking it, like I said, because they believe it helps, people fund terrorism and evade taxes and things like that.
All right, so you're not saying that authorities see Bitcoin as a threat to their ability to create fiat currency out of thin air?
Maybe cryptocurrency overall, maybe, but. And we've seen like Christine Lagarde over at the ECB. She says that we need to seal off the exits, right? We don't want financial innovation because it threatens our financial stability. And so, again, the government's big. There's some people who probably do see it more of a threat, like Elizabeth Warren or Christine Lagarde. But then, like I said, 24 high-ranking people in the U.S. government who are pro-Bitcoin. I think Jerome Powell is favorable to Bitcoin. So I think it's split. And I think the government has bigger problems on their hands right now. Jerome Powell and the Fed are fighting off the ECB. They're fighting off. So let's play that out just a little bit more. That's always the big argument, which is why would the government or why would the central banks ever allow something like Bitcoin to succeed? They want to keep control over the money, don't they? Which, of course, yes. But does the Fed and Jerome Powell want to give up control over the dollar to the ECB? Of course not. Right? Do they want to give up control? And it looks like now the Fed doesn't even want to give up control to the government on the money side. And so there's lots of factions and wars going on. I think they have a lot bigger things to worry about than trying to shut Bitcoin down at this point. I don't see it being on the docket.
Okay, but you do see the FTX fallout leading to tremendous regulation.
That's right.
And you did make the point that you think that perhaps it was a controlled demolition. Before we get into what kind of regulation you expect, let's break down that idea. You had a LinkedIn post recently where you suggested that the deep state orchestrated the FTX collapse in an effort to, and I'm quoting you, capture the crypto industry and bring it under government control. You're not the first person to have this view. We've spoken to several people. We had Mark Yusko, for example, on the show. He has a very similar thesis that Sam Bankman-Fried, the founder of FTX, is a useful idiot in what he called an elegant takedown of the crypto industry, that he's a pawn in all of this. Let's hear your thoughts. What do you mean by it was a controlled demolition?
Sure. So I think there's a lot of coincidences, and ultimately when there's too many coincidences, there must be something there that, as they say, where there's smoke, there's fire sort of a thing. And so a lot of these could be coincidental and some could be serious, but again, collectively they add up to a lot. So if you look back from the beginning, this one's maybe more on the coincidental side, but FTX was founded within weeks of Biden announcing that he was running for office. That one's probably a little bit more on the coincidental side frame. And then of course, FTX became Biden's second largest donor behind George Soros, which is no freedom lovers fan. And so they became the second largest donor. We know that he gave about $40 million to midterms to Democratic parties this year, and he had committed or pledged or hoped to give up to $1 billion in the next election. And so it became this
dangling that carrot. Yeah.
Dangling that carrot. And then we can go deeper, right? So it's like, who are his parents? So both of his parents are law professors, and not just law professors, but tax law professors. His father actually wrote legislation for Elizabeth Warren. Oh, coincidentally, who's the one passing this new Digital Asset Anti-Money Laundering Act? So his father did that, and his father wrote multiple papers on why we need to get rid of cash, right? So his father is in the government already writing legislation about banning cash, and his mother is also tax law as well. But then also his parents collectively are what's called bundlers, which means they're in Silicon Valley meeting with their buddies and collecting money, bundling money together to donate to super PACs. So they're very involved in politics, into the Democratic Party, and in influencing cash, business, and tax and policy and things like that, even writing legislation for Elizabeth Warren. So there's some stuff there. Then we saw that he became a partner with the World Economic Forum. Now, that's another coincidence, but these coincidences start adding up. Mm-hmm. We also see that his aunt also works for the World Economic Forum, and not just World Economic Forum, but also Johns Hopkins University, which was involved in the Pandemic 201, which was the test that happened right before the whole world went into lockdown, which is another coincidence. His brother also started a fund and a super PAC to raise money in conjunction with the World Economic Forum to prevent the next pandemic. So I think it was like $18 million was spent on pandemic stuff, and they were hoping to stop the next one. So you have this deep connection and family ties from his brother, his aunt, the World Economic Forum, Johns Hopkins University, the pandemic, his parents, the bundlers, and it goes on. So then, of course, Caroline, who was the CEO of Alameda, her father taught at MIT, and he was Gary Gensler's boss.
Yeah.
It just kind of keeps on going. Now, we see a lot of people coming out of MIT that end up in similar situations like this, like almost like MIT could be some sort of a recruiting center. And so we can keep going.
There was also the interesting connection with Ukraine.
Yeah, and there's Ukraine.
Yeah. Yep. Elaborate on that one, how FTX facilitated donations to Ukraine.
Yeah, so then people wanted to donate money. Everybody wanted to support the current thing. And so they said, hey, we'll donate cryptocurrency. And so Sam Bankman-Fried said, fine, we'll set this up. We'll collect the cryptocurrency. We'll deliver it. Now, there's some shady stuff there as well, coincidental maybe. But what happened is as soon as Sam Bankman-Fried got into trouble, they took him off of the website. They started changing the website. But of course, the Wayback Machine, it keeps the archives of all the web pages. So what we can see is that, it's been a while since I reported on this, but I believe they had reported $70 million in donations, and then they updated the website to say that they had only received $60 million in donations, and then they updated the website to say that they had given out, I believe, $53 million in donations. So there's about a $16 million that are missing out of this. That are gone based off of the updates they had put on the website. So there's some interesting things there as well, and of course, the fraud and theft and grift that goes through Ukraine is long documented. So there's plenty of connections there.
Some very interesting coincidences, as you say. There's no proof, of course, just some tenuous connections, some very odd ties between parties here. But now we have SBF arrested. Does that negate the theory, or
I think it only makes it worse. It only makes it worse.
Okay, go on.
Because a couple of things. So one, back to SBF. So, he built a $30 billion company in 3 years. Him alone, he didn't have any help doing this. And then this money, he was buying his way into Washington to create all this new legislation. So he was the one championing all this legislation. Okay, so then let's jump into he got arrested. Now, he was supposed to appear before Senate to give testimony.
Yeah.
And nobody was moving on this. I mean, calls all over the internet for why isn't he arrested? Why is he still a free man? They need to take him into custody right now. But yet he's on book tours and he's giving podcasts podcast talks and this and that. Well, he was scheduled to speak before a committee to give his testimony. And the day before he was supposed to do that, they grabbed him. Could that be another coincidence?
Right.
Like they don't want to hear what he's going to say? Could he be implicating some people? We know the Jeffrey Epsteins and the like of that world, they never get a chance to publicly talk. And so he disappeared right before that happened. And when I say disappeared, he waived his right to be sent up to the United States.
Extradition.
Extradition. Sorry, I'm drawing the blank on that. So he waived his right on that, which means that could have been like about a 3-year, potentially it takes about a couple of years, up to 3 years to maybe get him extradited to the U.S. That's how stories die. That's how stories don't get told, right? I don't mean him dying, but over a couple of years, that thing just fades away. Now, all of a sudden today, it looks like he got brought into the hospital for some mystery illness. And so I would say the coincidences only keep piling up. It doesn't get more clear.
Yeah, this is a very mysterious story as it continues to unravel, and a lot more suspicious elements coming out. Again, the idea is that perhaps he is a pawn in this, a useful idiot to bring down the crypto sector at large. Just speculation. Just speculation, but an interesting theory to pass nonetheless. But if the end game is regulation, now that, we, as you say, the will of the people, everybody is now horrified that this could have happened. Regulators march in with indignation. What kind of regulation do you expect that comes out of this now?
Let's talk about the first piece, which again is just coincidental because apparently his father is a tax law professor who's been writing papers on ending cash and wrote legislation for Elizabeth Warren. He was using this money to get into Washington to help write legislation. And what's the first piece? Oh, it comes from Elizabeth Warren. Oh, just another coincidence. And it's called the Digital Asset Anti-Money Laundering Act. Now, what's interesting about this bill is, of course, these bills don't just get put together in a couple of days or a couple of weeks. These things are written well in advance. And so the timing of it coming out, as well as, like I said, the person who put it out and the previous ties to his father are pretty shady. But this Digital Asset Anti-Money Laundering Act by Senator Warren and Marshall is a direct attack on personal freedom, privacy, and crypto users. And it would have done, of course, like most laws, would have done nothing to prevent the next FTX. And basically what they want to do is they want to say that any software that's related to cryptocurrency would basically be banned because every piece of software would have to collect KYC, know your customer, and AML, anti-money laundering, information on everybody. So if I'm a coder and I write a piece of DeFi code and transactions go through my code, somehow that code is supposed to capture that. And they want that to apply all the way even to private wallets. And so, of course, the big innovation with Bitcoin and cryptocurrency is that I can custody my own assets. I can go in the App Store. I could download any number of apps and create wallets to start storing my coins. And they would want even that to be regulated. So all of this would have this KYC kind of situation on it. And the problem is that we have this brand new, as I call it, technological revolution, this brand new technology that we don't know where it's going to go. It's so early now. It's like saying electricity, the first application of electricity was the light bulb. But of course, electricity is used for a lot more than a light bulb today. And so they're trying to take this brand new technology and say, well, it must do these things like capture KYC and AML through these checkpoints. Well, it's impossible. Who's Elizabeth Warren? Does she know how to write cryptocurrency code? Of course not. So she's saying, well, it should do this, but it's not possible. Well, if it's not possible and it's a law, then that means you can't do it. And so this is probably the most restrictive one that could potentially really hamstring, shut down the entire cryptocurrency industry if passed.
Right. That's a big if. And as you say, the know your customer requirements at every single step of any kind of transaction would be like death by 1,000 cuts. It would just bring the sector to a grinding halt in many ways. But because you mentioned that SBF's father was involved to some degree with writing this legislation, is that to say that you think that, that they're in on it? Like the theory that I've heard is that, again, that they're pawns, that they didn't know that they would be used in this way to bring down the whole sector. But do you think that perhaps again, just a theory, just speculation. Do you think that there is sort of some collusion, that they knew that there would be this collapse and that regulation would come as a result of it?
So first of all, just to clarify, I said that SPF's father had previously written legislation for Elizabeth Warren.
Okay.
I didn't say he wrote this piece.
All right.
And I don't have any reason to believe or deny that. I don't know that about this piece, but he did previously. But as far as your second question, yeah, I think everybody's useful idiots. I mean, there's some people pulling strings high up. They're playing, this proverbial 4D chess kind of a thing. But I would say that the Sam Bankman-Frieds, his father, maybe even Elizabeth Warren, are probably the useful idiots in this. And I think there's something much bigger. We saw another thing, and I don't have the exact details with me, but it came out that he had bought this bank. And I don't know if you saw a little picture. It's like a little 800 square foot building, this little bank. And that bank has deep ties with known intelligence assets like Deltek, for example. And so there's deep ties into the intelligence community, which also has ties to Jeffrey Epstein. And so I think it goes deeper than that. I think there's someone pulling bigger strings. And yes, to answer your question, I would agree. I think SBF is probably just the useful idiot here.
So this bank has ties to Jeffrey Epstein?
To the intelligence community, which tie all the way back to that. Yeah, Whitney Webb has really put together a very compelling string of events with all the ties and dates and amounts and everything that ties all this together. And so, again, we have no smoking gun here, but we have lots of coincidences.
Right. Okay. A lot of speculation, a lot of question marks, a lot of very odd coincidences, Mark. But what we can be relatively certain of is that we are going to get regulation because of this. Warren's regulation, perhaps too extreme, too severe. What are the other sort of legislation that's out there? What is the more likely regulation that you think could come as a result of this?
Yeah, so while all of those coincidences are fun to talk about and it's interesting, we can speculate, we don't know, so we can just look at the facts, right? And so the facts is that the public now demands action. The SEC looks horrible, they need to take action. So we talked about the one bill from Elizabeth Warren. There's another one, it's called the Digital Commodities Consumer Protection Act. And that's for the CFTC. And so the CFTC would get more oversight. They'd get more authority to go in and request, documentation and to vet these companies and things like that. And so we kind of have both regulatory bodies trying to pass these pieces. Plus, we also have some very aggressive rhetoric coming out of Gary Gensler. He said that he thinks that the top 5 cryptocurrency exchanges are security exchanges, and they should register as security exchanges. And so if we just saw in the United States, Coinbase, Kraken, Gemini register as security exchanges, then they have to delist tokens that aren't registered as securities. And so he's said that. So he said this very increased rhetoric. And like I said, I think the public demand is going to be that he acts. So I would imagine we're going to see increased enforcement on a bunch of cryptocurrency projects. Of course, we have the Ripple case that's maybe going to come to a head maybe in the next 6 months or so, next couple of months. That's going to be a big one. And then I think probably next year we're going to see action on some exchanges, because rather than trying to go after 20,000 projects, they can just go after 3 exchanges and just take care of the whole thing. So that's what I think. Increased calls, two laws on the books right now. The Ripple case, which was going to be a very big precedent if set. And then I think we'll see increased enforcement on the exchanges.
And yet you are still bullish for Bitcoin in 2023. What is your outlook there?
Yeah, I mean, they both original, the head before Gensler, Jay Clayton, said that it was a commodity. Gary Gensler has reiterated that multiple times it's a commodity. And so what I said is I think a lot of that money from cryptocurrency would find its way to Bitcoin. So if you look at Bitcoin as a store of value and asset, well, then you look at what other assets and stores of value do we have? Now, there's a bunch of them, but I've broken them down into a couple key buckets. And so really we have gold. Gold's at about a $11-12 trillion market cap right now. And we have reports from Citibank and JP Morgan, both stating they think Bitcoin will overtake gold. So that's 12 trillion. That's a 20x from here. We know that Bitcoin is like an offshore bank account. It's like a Swiss bank account in your wallet. I can custody my money without a counterparty. Now, we have offshore banking that also keeps it out of sort of the government hands. But like with the Russia-Ukraine thing, we see all these Russian oligarchs getting their bank accounts seized by Switzerland. And so we have about 40 trillion 40 trillion parked in offshore banks. So a good portion of that could probably find its way to Bitcoin. It's much more secure than offshore bank accounts. We have about $100 trillion just in fiat. So a lot of people are probably still storing their value in fiat. And so 100 trillion, part of that can come over. We have 100 trillion in bonds in the debt market, which of about 18 trillion is actually negative yielding, which is stupid. And so why would you lose money to loan money? And so some of that will come over. In equities and stocks, we have about $120 trillion just in stocks. And then we have about 325 trillion in real estate. So if you just add up those couple categories, 5 or 6 categories, you're at about $700 trillion in store of value assets. Just in those 700 trillion of store of value assets. So if Bitcoin, which I believe could be argued it's better than all of those in many cases, if it could get just 5% of the market, just 5% would be 35 trillion divided by the 21 million Bitcoin cap. And it brings to you about a $1.7 million Bitcoin price target, which is about a 100x return from here. The next question you'd ask me is when do I think it could achieve a 5%? And I think by the end of the decade, in the next 8 years, we could probably see that number. And I think probably by the end of next year, depending on what happens with the Fed and the pivot, I would expect Bitcoin to probably at least double from here by the end of next year, and then make a pretty rapid descent to well over $1 million coin by the end of the decade.
All right, so around 30,000 to end 2023. That's around about double from where we are now, conservatively speaking, 32,000. But between 30 and 40,000 to end 2023, give or take, and $1 million by the end of the decade. None of this has deterred you. Still very much a Bitcoin bull.
That's right. If not Bitcoin, then what? Right? The state of the world needs something like Bitcoin. There's no alternative to Bitcoin right now. And so, if not Bitcoin, then what?
Well, Mark, many viewers would say potentially gold, but I know you're out of time, which is a teaser to bring you back and explain that and break that down for us. And we also need to have you back to discuss the Bitcoin play with central bank digital currencies, CBDCs. But we're out of time for now. Thank you so much for joining us, Mark Moss. Really appreciate it.
Thank you so much.
Thank you. And thank you for watching. I'm Michelle Makori. This is Kitco News. Keep it right here.